Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Westpac has reported a slight dip in first half earnings with an interim profit of $3.3 billion, down just a touch in the same period last year. The result came in slightly below expectations, with the bank declaring an interim dividend of 76 cents per share. The good news, fewer mortgage customers are struggling to make their repayments, and Westpac's also seen strong growth in business lending. Anthony Miller is the CEO of Westpac. Anthony, welcome to Fear and Greed.
Thanks, Sean. Great to be here.
The highlight and the low light from the result for you?
The highlight is that I think at last we can start to see some positivity in terms of, the reduction in stress levels within the business book, delinquencies within the mortgage book. And then, and so that's a positive. That just means things are starting to improve. That's not to diminish or devalue the fact that it's still pretty hard going out there, but that's a positive. And also very positive to see small businesses just starting to get back on their feet, so to speak, in terms of their free cash flow position. So I really like that aspect of the result. And that lines up also with the fact that we've just got a really strong balance sheet and we're ready to go in case people need help. The challenge on the other side is that there's so much more that we want to get done, and it's just a question of getting it done in the right priority. And so, costs are up 3%. I need to be very disciplined around our costs as we go forward. But, costs are up, and they were up necessarily because I've got to invest in a few more bankers and make sure we've got the right resources out there in the marketplace. And also, I've got to get Unite done. And so Unite's the other challenge. So while it's a necessary spend, it's still, frustrating in terms of its outcome for the shareholder. But nevertheless, we're thinking long term and we're going after it.
Okay, Unite, I'll just explain to listeners, is actually the spending on bringing the technology stacks together. Effectively, that's right, because Westpac is a conglomeration of a number of banks over many years, really hasn't been done, and this is one of your babies to bring it together. At the end of that process, how much better, or will it be better, Westpac's technology for we users compared to the other banks?
Well, that's a really good summary of it, Sean. So thank you for reading the materials in relation to Unite at Westpac. Look, at the end of Unite, what will happen is that rather than us have a multitude of bank systems and a multitude of ways in which we might do credit cards, we do deposit accounts, mortgages, we'll be doing it one way on one system, following one process. And the outcome of that is that we'll be able to run the bank faster, we'll be able to run the bank more cheaply, we'll be able to change things more cheaply, and we'll be able to do it all without introducing any risk. And so what that then allows us is to go very fast in making things better, delivering better services, better products, and better outcomes for the customer. And so Unite gets us to a point where we can really then start to layer in some incremental service value and product features because we're doing things one way. And so that's what Unite delivers for us. And then in other parts of the bank where we have already everything done one way on one system, we're investing at the moment in creating some really exciting new propositions, particularly in the institutional bank and also the business bank.
Okay, I want to get to the big picture in a moment. Your net interest margin, effectively your profit margins for your vanilla banking, let's say, steady, I think, maybe down a touch. Where do banks get their, how do you increase profitability when you've got this cost side that's so tough? And I think when I read it, your forecast for credit growth has actually come down a bit too. So how does a bank like Westpac, which is this big organisation, kind of get that growth, get that improvement in profit margins?
Well, that's the challenge, Sean. That's the challenge in front of me every day. How do I lift revenue? How do I grow revenue without, if you will, dragging costs up? And one of the areas, just as an example to show you what we're doing and where the opportunities are for Westpac, particularly given where it is at the moment, is in business bank. We provide our business bank customers with a loan. We provide them with a transactional account, but there's all these other things that if they have a transaction account with us and they have a loan with us, all these other things we should be doing for them. And so, for example, the number of FX transactions we do for our business bank customers is about half of what our peers are. So what we can and should be doing is more of those services, more of that business, for our existing customers, and we can grow revenue without having to introduce new risk, introduce new products, introduce new systems. And so that's the stuff that we've got to focus on. And we're after that in terms of business bank. Likewise, there's more we can do in the institutional bank. And I'd say also in the context of consumer, in addition to doing the mortgage, which is a tough, low returning product for the bank, what are the other things we can be doing for our customers? And that's new accounts, new style of savings accounts, new personal lending, new card features, etc. And so it's about how do we add these other features that hopefully customers really value and appreciate, and that's how we then grow revenue.
Now, we're not an investment podcast, so I'm not asking you what's going to happen to the share price, and anyone listening, get your own financial advice before making any investment decisions. When your share price is up 20% or more in the last 12 months, notwithstanding a bit of a blip today, how do you keep that going, Anthony Miller, CEO of Westpac? How do you keep that running?
Well, look, my focus has got to be about what's the strategy for the bank? What's the right way for me to take the bank forward and grow revenue, grow the returns for shareholders? And so that's what I'm focused on. And then, of course, it's critical that that vision we have and that path we want to follow is shared with the market. And then it's entirely up to the market to make that decision as to whether they buy our shares, whether they believe in that vision we have, they believe in that strategy that we're pursuing. And so it's the death of many a CEO who worries unduly around persuading people to buy their shares. Rather, I'm very fixated on making the share price sure it goes up, and I want that for all my shareholders. But my better time and effort is spent on what's our strategy, how are we executing it, do people understand what we're about and what we're doing well and what we're not doing well, and do they buy into that? And then that's their choice.
Okay, we'll be back in a moment, Anthony. We'll talk more about some big picture issues, particularly about how you run one of the major banks in Australia. I'm talking to Westpac Chief Executive Anthony Miller. Before the break, you were talking about focusing on strategy. You've had the job since December last year. Presumably you got a phone call or something from the chair saying, would you like the job? You say yes. You sit down. What do you do? Do you look after, 10 direct reports? Do you just worry about strategy? Do you actually, I'm sure you do care about the person in front of the teller in the bank branch in Western Australia, but your day-to-day job, how do you do it?
Well, it's busy. And I'd be fair to say that I've been in the seat today as we sit here talking. I've been in the seat 141 days.
Right.
I've worked every single day,
right,
other than Good Friday, where I took a little bit easy. But otherwise, I've been on the tools since then. It's a labour of love. Okay, it's a real privilege, a real honour to be the CEO, and so I can't work too hard. I can't do enough in terms of what we need to do and what I think we need to do to take the company forward. But my focus was originally about being very clear about what are our 5 priorities and making sure everyone in the company understood those 5 priorities. And I've anchored it around the customer and making sure the company is customer obsessed. People, I don't think you can have the best customer proposition unless you've got the best people and the best employee proposition. So I'm really focused on how do I lift that employee proposition. It's not just the way you pay people, but it's the way you lead people. It's the way you invest in people. And how do you inspire them to give you their discretionary effort? And then, of course, things like risk. We've just got to be better consistently at how we manage risk within the bank. That's our job description. But we don't want to just do it. We want to be differentiated by it. So how do I get everyone lined up around that? And then the other thing that was a priority was around change. The fact that the bank has to continue to change, and the Unite project is the cornerstone to that over the next 3 or 4 years. And so how do I make sure that we don't think of change as this burden, but actually if change is something that's a constant now, the regulator, the government, everyone is always asking us to change the way we do things, asking banks to change the way they operate, then how we do it becomes a way to differentiate yourself by doing it better, faster, more safely than our competitors. And so getting people to buy into that vision. And then finally, performance. And, that comes back to just making sure everyone understands we have got to deliver a sustainable return to the shareholder. And so I put that together, and I spent my first, 141 days very much engaging with every employee, top to bottom, about that. And what I've been most delighted with is just how people are on board for that. People really want to go for it. And there's a real affection within the Westpac group. the employees here, they love the company. It's a real privilege to work with them. And they're so affectionate for the company, and they have so much of an aspiration for where Westpac should be. Australia's oldest company. We're the most significant contributor bar none in terms of the economic development of this country over 200 years. And so everyone wants to see us, aspiring to be that bank that leads and is, in, if you will, number one. And so everyone's got behind that. So I'm pretty invigorated by that. But then, of course, the hard work starts. So it's all easy to put the 5 priorities up there, Sean, but it's all about what you do afterwards.
Okay, a few external issues. A Donald Trump world, what's that mean for Australia? And I'm talking about the economy, not Westpac per se. What's it mean for Australia in the Donald Trump tariff issue?
Yeah, so certainly the uncertainty and the inconsistency that we're seeing out of the US as a result of Donald Trump is quite unusual. It's unprecedented. And it is putting at risk global trade and global norms that we as a country have come to rely upon. We are a nation that enjoys the benefits of free trade, free access, uninhibited access to various markets. And so that's a risk for us. Having said that, the one thing we've got to do with what's going on in the United States is not to react to the headlines, not to react to the announcements, because too often we've seen the announcement and then within a month, certainly within a couple of months, things start to be adjusted, reversed. And so the headline and the drama at the start is not what we need to react to. And so while it does sound dramatic at the moment around the tariffs and what's being imposed and the reciprocal tariff war that seems to be emerging, at the same time, you've seen lots of people highlight they want to do a deal. They want to actually agree something alternative. And so I think an element of rationality will take over, and so therefore its impact won't be as dramatic. But for Australia, what we've got to do is we've really got to ask ourselves, well, okay, if things are going to change, and in fact, irrespective of Trump, we should be asking ourselves, what more can we do? How else can we better set up Australia? And I think that means starting to think about doing things differently, growing in areas that classically we haven't grown in before, trying not to be entirely reliant upon selling commodities to 1 or 2 markets in the world. And so maybe there's a positive lining to the Trump phenomena, which is it asks us to think about things and start to do things differently. And I think the re-election of the Labor government on the weekend is the first step in affirming that actually there's a moment now for Australia to really set ourselves apart and start to get going.
So we are running out of time, but I'm just interested in that we now have a dominant centre-left government, likely to be in power for 6 years. If you're a betting person, you'd say at least 6 years. Is that a good or a bad thing for business?
So I certainly think the re-election of that government, and congratulations to the Prime Minister and his team, is a positive for Australia. We are a beacon of certainty, consistency and continuity in a world that is very uncertain and very inconsistent. And that is a real positive. That is a comparative advantage for this country, that where we've come from and where we're going. And so that is something that we must not fail to capture, which is that consistency and continuity. And I would say that, the fact that even before the election last week, the Treasurer was talking about, let's start thinking about and driving productivity improvements in Australia, highlights that there's a real consistency and certainty that is really important for Australia. And if you think about Australia's success, Sean, it's been built on, we are classically an importer of capital and talent. And now, how do we compete for capital and talent? Well, the fact that we've got a consistent, certain regime, certain set of policies, and we know where they stand. It doesn't mean you agree with everything they do or don't do, but you've got consistency. That's what tracks capital and talent. And I think, therefore, it sets us up for the next 3 to 4 years. And I think I'm looking forward to seeing what the new government will do in terms of driving productivity and potentially exploring some other reforms over the course of the next term of government.
I can't have a bank CEO without one last question. Interest rates, are we going to get a cut on May 20, Anthony Miller?
Well, I've got a lot of faith in my chief economist. I think she's the best chief economist in Australia.
Well credentialed.
And she's exceptionally well credentialed. She's also probably one of the most intelligent persons I've ever met. And so she's forecasting a rate cut in May. So I feel like that's likely. But you know what? it's an uncertain world, and who would have thought before the election started 6 weeks ago that you'd have the result we have? So
Yep.
I think anyone who talks in absolutes and with absolute view on things is treading into dangerous territory. But having said that, it does look like the Reserve Bank will cut rates in May, and certainly that's our forecast as we sit here today.
Anthony, thank you for talking to Fear and Greed.
Thanks very much, Sean. Real pleasure to be here.
That was Anthony Miller, CEO of Westpac. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.